The last couple of years have certainly been a wild ride for real estate investors. Let's do a recap of what happened and what to look for next. The last couple of years have been very interesting for real estate investors. Indeed, first you saw interest rates plummet, and you saw vacancy rates skyrocket, and rents came down, and landlords tried to keep the good tenants, but unfortunately lost some tenants, right? Rents plummeted in the city of Toronto, and basement apartments became very hard to rent. I know from experience. And nice apartments, were offering incentives. They were offering 1 month free TV, all that kind of stuff, just to get tenants into those places. Listen, the last couple of years had been the best time to rent a place in Toronto, probably forever, and we'll never see that again. And then renovating was appealing for a time, right? Because people were thinking, well, rents are down. Now's a great time to get in there, renovate these units, and then when the market comes back, and attract a better client, increase your rents. And then, unfortunately, everybody got the same idea. The cost of renovation skyrocketed, and it became very difficult to find contractors and trades to actually do the work. And the approval and inspection process really got slowed down, and that really delayed a number of projects. So then, as housing prices climbed, while rents were shrinking, investors had to accept lower and lower cap rates. So cap rate basically measures the net income on a property divided by the dollar value of that property, right? So, initially good cap rates were say 5%. Now properties are trading sub 4%, right? I've even seen some in the 3-ish% range, and I guess those investors are hoping A, that rents come back and they can effectively change them, and B, they're maybe betting on the value of the property increasing significantly. And now, as interest rates are climbing again, it's becoming more difficult for investors to cash flow on these properties that have lower than market rents. So we're stuck in this situation with low return and maybe some negative cash flow. The political will has changed a little bit, and we're sort of starting to vilify the small investor, right? Like, people think a lot of investors bought secondary properties in the past few years, and now we're kind of starting to doubt whether that makes sense or not, when it was the small investor in the last 30 years that's really contributed to the rental market. It's really created capacity in the rental market. And what that means is developers are going to be doing more of the supply if we don't kind of keep up with smaller investors, and they're not doing it they're not doing it at affordable rates. They're aiming for the high end of the market, right? Their price per square foot in rents is way higher than the average. So it's been an interesting ride for investors, but like we always like to say, there is always opportunity. And truthfully, through the last few years, we've helped many investors get into properties. We helped them buy, renovate, get great rents, get great tenants. So it's still possible. And now is actually still a great time to invest, as some buyers have retreated from the market, may be able to pick up properties at a lower price. Interest rates, while they're up, they're still historically low and could come back down. And rents are skyrocketing, right? That's what we're seeing in the rental market. We're seeing rents increase like crazy, and that will continue. That will probably get worse over the next few years. So there's a great opportunity to make money. Because of the interest rate increases, you'll see a lot of these construction projects slow down. Less people will wanting to do construction, so there'll be more capacity, and hopefully prices, well, they may not come down for renos, they'll at least flatline a little bit, right? So, buying a property and renovating won't be, as onerous as it was in the past couple of years. That's probably the most interesting in the past couple of years is, what we've noticed is we work with a lot of seasoned investors, and, they ask us, what's happening in the market, but more to understand, where there is an opportunity in the market, right? We get, newer investors or other people ask us, what's going on with interest rates? Is the market going to go down? You know, and a lot of that is, you know, helping them sort of justify maybe why they shouldn't get into the market. But what you'll notice is seasoned investors, they're always just looking for opportunity. And that's what we want for you. We want you just to get in there, invest, and make money in this game. We hope you found that hugely helpful. You know, if you're not yet a real estate investor, then let's talk, let's get you into this market. And if you are a seasoned real estate investor, then let us help you take you to the next level. If you have any questions, shoot us an email, info@thinktO.ca. Please like this video so we'll know to make more of this content, and smash that subscribe button so you get updated on this great content each and every week. Talk soon.